Morning, everybody. Uneducated Economist here. Oh man, I think I forgot to do the thumbnail. Sorry about that, guys. It's probably an ugly little thumbnail up there, just a little generic one. Oh well. Good morning, everybody. Uneducated Economist here. In this video, I'm going to talk about the proof of the propaganda within the Federal Reserve and how it is that they use the media in order to conduct themselves when it comes to their monetary policy, because their monetary policy used to be when they would adjust interest rates. Now the monetary policy is more about the idea of them adjusting interest rates than it is more to do with the actual adjusting of interest rates themselves. And I found proof of it right now. If you were to Google, just right now, just Google Bowman sometime. Just those three words. Google Bowman sometime. And of course, this is going to be time dated to this video being right now, current. But if you type that into Google and hit the news feed, you're going to find all kinds of articles talking about sometime, right? Her sometime of what she believes inflation is going to be going into the future. And this is very interesting to think about, considering what she was saying about sometime about a month ago. So now, when it comes to the articles that are linked down I left one article. I don't want to give too much attention to it. But in the article, when you read through, it sounds like Bowman, who is, for those of you who don't know, Bowman is a voting member of the FOMC, the Federal Open Market Committee, and one of the kind of leading people at the Federal Reserve. My computer is not cooperating with me right now. Okay. But okay. So in the article, they're talking about how she sees inflation being persistent going into the future, and this is exactly what it is that they are addressing, or at least what it is that they're referring to, because she said it in this speech. With an annualized 3-month core PCE inflation jumping to 4.4% in March, well above average inflation in the second half of the last year, I expect inflation to remain elevated for some time. And that's it. The entire speech, she never says sometime anywhere else except for that sentence. Right? So this is important, because this is where the propaganda comes in. I know I'm not explaining it. I've drank a lot of coffee and I'm trying to put this thing together, but this is it. That was the sentence right there. With an annualized 3-month core PCE inflation jumping to 4.4% in March, well above average inflation in the second half of last year, I expect inflation to remain elevated for some time. Now, as people believe, and think about that, that is inflation expectation going into the future when you see all this media attention being brought to this, right? That she sees this inflation going into the future that is elevated. Right? And now when we think about what it is that's going to be coming to monetary policy going into the future, we have to consider that, because this is what she is saying to the media. Now, if we go back just 1 month ago, right, and to another speech that was given, she had this to say. Another notable change to the strategy. This is the same person. This is Bowman. Another notable change to the strategy statement was the adoption of some refer to as an asymmetric flexible average inflation targeting, or temporary price targeting. Specifically, the new statement noted that in order to anchor long-term inflation expectations at 2% goal, the committee seeks to achieve inflation that averages 2% over time, and therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. Think about that. She's talking about inflation just a month ago, and how appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. That sometime. Think about how she uses that exact same statement just a month later, talking about that exact scenario. Oops, I just passed it up here. Gosh, my computer is running so weird today. Okay. When she says, with an annualized 3-month core PCE inflation jumping to 4.4% in March, well above average inflation in the second half of last year, I expect inflation to remain elevated for some time. Man, perfect in line with their monetary policy. They have achieved it. This is exactly what they were looking for. But yet, if you go by this article, people have this expectation coming from it. It's just like, oh man, the Fed screwed up. They're going to keep these interest rates elevated because they've lost control of inflation. Bad on Fed. No, this is exactly what the Federal Reserve was looking for. And they've been trying to do this. Oops, let me let go of that. Come on, there we go. Man, my computer is just so, it's like on its own brain right now. And this coming from Powell in 2020 to actually, let me bring this up here a little bit, where he talks about how they have changed. They do not go for a 2% target, and this is where he talks about it. We have also made important changes with regard to price stability side of our mandate. Our long-run goal continues to be an inflation rate of 2%. Long-run goal of 2%. Our statement emphasizes that our actions to achieve both sides of our dual mandate will be most effective if long-term inflation expectations remain well anchored at 2%. However, if inflation runs below 2% following economic downturns, but never moves above 2% even when the economy is strong, then over time inflation will average less than 2%. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down. To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to any particular mathematical formula that defines the average, right? So that's why it's going to be higher inflation for some time, because they have no idea on how it is that they are going to be coming up with an average inflation rate over time, because they don't have a time schedule to it, and they just need it to be appropriate monetary policy to be slightly or moderately or over 2%, whatever that's supposed to mean. There is no definition to any of this stuff. So when you read these articles, like when I read that article coming out, and I looked at it, and I looked at the few other ones that were coming out, and I'm like, man, if you did not understand this other information that they are attempting, they are trying, they are pushing, they want higher inflation. This is what they were asking for. This is back in 2002, and Bowman's speech was just a month ago, saying exactly what it is that Jerome Powell was talking about back 4 years earlier, almost 4 years ago. All right. So we think about this. This is the propaganda. This is how the media pushes it. Now, here, wait a minute. I got one more for you. Let me go see if I can find it here. See, this is proof on how they. Let me see if it's up here. If it's still up. Right here. Okay, this is a speech given. When was this thing given? Let me cruise back up to the top. Okay, this is a speech given April 3rd, 2024. So what? This is like a month ago, right? And this is what Jerome Powell, right? This was Jerome Powell's speech. What's the title of this speech? Opening remarks by Jerome Powell, Board of Governors of the Federal Reserve, fireside chat at the Stanford Business of Government. Okay, it doesn't really matter. April 3rd, 2024, Jerome Powell had this to say. Okay, and this is when he's talking about monetary policy, right? In 2022, we completed a year-long public review of our monetary policy framework, and late this year we will begin another such review. That what he is talking about right there is what I was just referring to back in his 2020 speech. That's what he's talking about in 2022, right? I left that speech down in the description. Now, this is what he has to say. Just a month ago, my colleagues and I explain our views on economic outlook and monetary policy. My colleagues and I explain our views on economic outlook and monetary policy. This is how he explains it. He says, this is how we do it. Me and my colleagues, this is it. We do it in monetary policies in speeches like this one, the one that I'm reading from, and visits to communities across the country. As part of an extensive outreach in which we seek input from individuals and groups throughout society. Very interesting. Think about this for just a minute, because a lot of times I look for things that just aren't there, right? Sometimes I look for things that aren't there. And I'm like, well, why didn't you include these guys or those guys or something else, right? Very specific, because how many times have I said it in my videos that they have two different communications? They have one coming out in the speeches in which they talk to each other in, right? This is their communications to each other saying, hey, this is what, is the real monetary policy. And then they use the media to conduct their monetary policy, which is them communicating what it is that's going on within their own nuggets, right? However, it's not they're not the same communications. And that's what is just like, it's so frustrating for me to try and explain these things in a video sometimes, because most people end up looking at the media for almost all their information. And that is exactly what they are using to guide monetary policy, because it's all about their words. My colleagues and I explain our views on economic outlook and monetary policy in speeches like this one and visits to the communities across the country. That's the real ones. That's how they communicate it, as part of their extensive outreach and all that other stuff. When they communicate to the media, that is them conducting their monetary policy, pushing out that forward guidance, attempting to get the people to react to their information, and it totally works. And this is like evidence of it happening right here. I mean, Jerome Powell, like when I read that, I'm like, man, you almost admit it right there, that if you really want to know the information, you have to read the speeches or you have to be part of that community, right? When he says communities across the country, when was the last time you know about the Federal Reserve stopping in your town to give a talk and hang out and say, hey man, what you up to, right? When was the last time you ever heard of something like that happening in your community, right? Oh, I'm sorry, wait a minute. Maybe if you're part of the, let me cruise back up here. Maybe if you're part of the Stanford Business, Government and Society Forum, Stanford Graduate School of Business, maybe if you're one of those people, those are the communities. Got it. Right. Maybe if you're part of that community, you would understand the monetary policy because they would explain it to you in a fashion that is more appropriate to what it's really happening, which is using the media to conduct themselves in a way that then achieves what it is that they were looking for. It's all about their communications. Yeah. All right. So many people up in here. We got 142 people watching right now. Thank you so much for joining in on this live stream. I hope you guys are enjoying my coffee rant here going on. Federal Reserve Community Outreach, yeah, wag the dog. Our stock market is how much older and bigger than China's. Deflation has always been the biggest concern of the Fed. Running hot now gives them more ammo to fight off the deflation they have been fighting for close to 20 years. Absolutely right, Jay. See, this is it. Once we learned what their monetary policy was really all about, it was just like they couldn't hide it anymore. It was just like, man, this computer sucks. They just couldn't hide it from us anymore. And even let me see, I think it was in Bowman's speech here. I think she really dives into it about how they were hitting the lower bound. Yeah, right here. The central top. This is coming from Michelle Bowman. A central topic of the FOMC meeting discussions throughout 2019. Remember, 2019 was how monetary policy strategies and tools could best achieve the committee's dual mandate of price stability and maximum employment when structurally low interest rates and disinflationary forces kept inflation persistently under the committee's inflation target. Right? 2019, they were failing to achieve the inflationary scenario that they were looking for, even though they just had all this damn quantitative easing, right? Persistently low inflation. Okay, there was also concern that the Fed funds rate, the FOMC's key policy rate, was close to the zero lower bound, right? That was it. That was their monetary policy. Once that hits zero, it's over, right? And it's not even like hitting zero being over, just not being able to adjust it down far enough means it's over, right? So was close to the zero lower bound. And that this proximity could limit the committee's ability to respond effectively to adverse shocks by using our primary monetary policy tool of lowering the target range for the Fed funds rate. Right? Exactly how I described it. So again, like to understand what it was that was happening, right? She's talking about 2019. She's talking about running out of monetary policy. They're talking about a disinflationary scenario. They're talking about this is coming to an end, right? This is what they were concerned about. Goes on to say, more broadly, many central banks around the world were grappling with the prospects of structurally low interest rates due to a variety of factors, including the three major ones: demographic changes, high savings rates, low potential output and productivity growth, the greater investor demand for treasuries and securities. Now, that was the biggest issue. You think about what was taking place back then that they contributed to the major problem of this low neutral interest rate within this environment, because that's really what it was. I'm not going to even get into the neutral interest rate right now. But you think about the problems that they were facing back then. I just saw the super chat come up. I'll get to that in just a second. Thank you so much. But you think about what the problem was back then, right? It was demographics. It was an older demographic, people, older generations, retiring, slowing down, taking but not contributing, right? This was what major problem, lesser populations coming in, right? Higher savings rates and low potential output of productivity growth. This is another one. This is like a major one that I think like a lot of people were not really quite aware of that they were facing back in 2019. It was the same thing that John Williams was talking about in his speech about low neutral interest rate world, how to deal with monetary policy in it. It's talking about productivity growth slowing down dramatically around the world. And now you think about it, if you go like, a lot of people ask me like, what does that mean? And I think probably the easiest way to kind of understand that is like just really simple, like take it down to your own personal life. Like what if you became like, you go and study and you're going to become a plumber, right? And you like your dad was a plumber and you want to be a plumber, but then you go to your town to go and be a plumber, but you realize the whole town's full of plumbers, right? There's no room for you to grow because there's no expansion of more need for more plumbers. And so this is the productivity growth that was slowing around the world, right? So if you just relate it down to your own personal self. Now I think that's oversimplified, but I think you kind of get it if you look at it that way. But then the investors' demand for safe assets like treasuries, the safe and liquid asset treasuries had become very, very low in yield, right? And now I create a wide gap between the yields on those safe and liquid assets like the U.S. treasuries and the corporate debt that was out there. And now I couldn't quite figure out why this was a problem, but I think probably the easiest way to understand that is that when the Federal Reserve wants to stimulate the economy and the lowering of interest rates, what that does is it sparks like business growth, right? People borrowing money to invest into their business, buying equipment and building new shops, hiring people, whatever. So that's like the idea that happens in the corporate debt market when the Federal Reserve tries to lower interest rates. But if they're lowering interest rates in the one security that is already low comparatively, it doesn't really spark the investors to move into corporate debt. So, for example, if a treasury and a corporate debt were very close to trading yield towards each other, right? If the wedge between the two were smaller, then when the treasury yields begin to fall, the investors will look for yield and they will be forced into the higher yielding debt, which would be the corporations. And now, so this to me is like the easiest way to kind of understand why that was a problem for the Federal Reserve, or why that was a problem for the economy, right? Is because this high demand, all these investors were high demand into the treasuries, driving the yield down on the U.S. treasuries and creating this wider wedge between that and the corporate debt. All right, you guys having fun? Let's go check out the super chat. Thank you so much, City Star Productions, for the 1999. Very cool of you, man. Ever since I watched your videos, I have been researching monetary policy. I understand a lot of stuff now. I am still new to this. Why do they want to raise the inflation? Okay, so I think a good speech, if you really want to get into the monetary policy and understanding it to this level, because a lot of things have changed since pandemic, right? But I don't want to say they knew the pandemic was coming, but they knew something like the pandemic would need to take place in order for them to save themselves. If you go back and you read Monetary Policy for a Low Neutral Interest Rate World, right? It's a John Williams speech, and in that speech, he talks about what's going on with the Fed funds rate, right? Being close to the zero lower bound. And if the Fed funds rate is close to the zero lower bound, that gives very little room for the Federal Reserve to conduct themselves as far as monetary policy and the adjusting of interest rates to stimulate the economy. Now, I know this is like a lot to take in, especially if you're just getting new to this stuff. So if you understand like what the Fed funds rate is, which this is, let me see if I can blast this out in just a couple of minutes here. My family wants to go to town here in a little bit. What time is it? Okay, I still got time. So if you want to understand what the Fed funds rate is, if you're not quite familiar with it, I'm going to kind of blast it out for you real quick, because the easiest way to understand it is from the overnight lending rate between the big banks. So there was a time when the Federal Reserve conducted themselves in what they refer to as a limited reserve system. Things have changed, but just stick with me for just a second here. So in a limited reserve system, at the end of the day, some of these big banks like the JP Morgans and, all those guys, Goldman Sachs, whatever, they would be in needed reserves or have excess reserves because it was a limited reserve system. So at the end of the day, the ones with excess reserves would lend them to the ones who were in needed reserves. And this overnight lending rate was the effective fund rate. So if the Federal Reserve wanted to adjust the effective fund rate, they would buy and sell treasuries off these big banks, adjusting the reserve levels of these big banks, and the excess reserve requirements, or the reserve requirements within these banks and the excess reserves would then start to create the overnight lending rate due to the supply and demand of treasuries being purchased or held by the Federal Reserve and adjusted by the overnight lending rates. Okay, so that's the easiest way to understand how the Federal Reserve adjusted Fed funds rate back then. However, since the quantitative easing and the pandemic and all this other stuff that has taken place, something has changed with the Federal Reserve, and all the money printing is that they went into what they refer to as an abundant reserve system or something of that nature. Right? I think they have a couple names for it. So we had a limited reserve system moving into an abundant reserve system, which meant that these big banks had an overwhelming amount of abundant reserves. They didn't need to borrow reserves from each other in order to meet the reserve requirements, because they had taken reserve requirements and dropped them to zero because they were all in abundance of reserves. Now, there was no really overnight lending rate that they needed to to adjust to establish the Fed funds rate. So that's when things moved over to the Federal Reserve at the account on excess reserves and then the repo facility. So between these two accounts, they were able to adjust the new effective fund rate, which was the rate between these two accounts. And that is how they now conduct themselves, and they're very close to slipping over to the other side as the quantitative tightening has taken place. So this is going to be like an interesting time coming up here in the next few months on when that actually happens. So when they move from this abundant reserve system to all of a sudden there's not enough reserves to meet the requirements, or however it is that they have the bank set at the time. That's a whole complicated thing. But understanding that, right? that they had this issue at the limited reserve system, right? This is 2019. You got to think about, right? They had a situation or they had a limited reserve system. They had what they refer to as a neutral interest rate, right? Now, the neutral interest rate is the rate that is neither accommodating nor restricting the economy. It's neutral, right? So that Fed funds rate was really, or the neutral interest rate was really close to zero, meaning like the Fed funds rate had to be close to zero in order to not be restrictive or accommodating to the economy. It had to be low. And so during a time of stimulation, when you were trying to stimulate the economy, there was no room, right? When you think about it, when the Federal Reserve had moved interest rates up to around 2% back towards the end of the Trump administration, and they called it a bunch of taper tantrum because they were trying to like really slowly move it up. They moved it up past the neutral interest rate. People got pissed knowing that it was, well, not knowing, but having this idea that the Federal Reserve was on this marching path of moving interest rates up. The markets hated the idea of it. And so when it came time to stimulating the economy, when the pandemic hit, and they were dropping interest rates before the pandemic, if you remember that, they didn't have that much room to go. So they dropped it 2%, tried to get it down to neutral, right? To not be restricted to the economy. Pandemic hit, they dropped it down to zero, still wasn't enough to spark the stimulation within the economy. And that's when all the like actual activity happening within the fiscal policies of the government started creating the same scenario, or the spending scenario, that the economy would expect from a lowering of interest rates that the Federal Reserve would typically use for their monetary policy to stimulate the economy. Because they couldn't do it, they dropped it down to zero, went into quantitative easing, and the government did a bunch of spending instead. Did I get all that right? Thank you for the 1999. It was very cool of you. Let's cruise down here. I see everybody's up in the chat. Hey, Brody. Hey, All Nighter. It's great to see you guys here. Once you pay it off your house and have lifetime worth of property taxes saved up, you save 75% of your slave. Okay. Sorry, I don't mean to just blow it off. It's 75% less a slave. All right. But that's true. Like, you never truly ever own your house. I mean, as long as you're having to pay taxes on it. And man, I was looking at some areas that had like an extreme tax payment. I thought, man, that's almost as much as a house payment is. All right. House of Lies, crime syndicate. That's where the thing is like, I don't really think they're a house of lies. Like, if you really look at these speeches, which they don't really want you to read because they did want the guys over at Stanford to read it, but they don't want Simon down there at the lumberyard reading this stuff, and they certainly don't want them like sitting there breaking it all down for everybody else to understand it, because this isn't communications for you and me. You understand that the media, that Economist, the Bloomberg, the Wall Street Journal, that's the communications that Federal Reserve wants you to go read about. They certainly don't want you reading these speeches, because if you read these speeches, you would see right through their lies. You would see the propaganda, right? And I mean, it's straight up. Like, I mean, I can't, like, it's so funny. It's almost to the point now when I see that stuff out there on the mainstream corporate media, that it's almost like being able to speak another language. And when you know what somebody said, but they don't think you know what they said, right? Have you ever been in that position? Like, if you know what somebody said and they don't think that they don't think you understood what it is that they said, but you knew clearly and you knew exactly what they said. This is exactly how I feel about this. Is because it was like, I look over here at this mainstream media stuff and I'm like, this is not the community. You're using the same words, right? You're using the words and you're putting it out there for the media attention, and you're putting it out there in such a way that it seems like you failed, like it's not part of what you wanted, like you're not achieving your goal, but yet you are achieving your goal. You're landing exactly right where you said you wanted to be. Okay? But nobody believes it that way. That is pure gaslighting. It is like, manipulation of perception. And they're great at it. Like, I mean, I've never seen anything quite like it because it's like literally 99% of the people, you know? I mean, I doubt even that. Sometimes I wonder if even the bankers who read this stuff even understand it to this level. Like, I don't even understand why I understand it to this level. Like, I mean, I just obsessed over it so much, you know? It was like, because once I saw it, like, I could see it, and I'm like, wait a minute here. You know, you're not going to be able to pull, because you know what it really was? Is I was pissed that I dumped all my money into silver, and silver didn't go to $500 an ounce like Max Kaiser said. That's why, you know, I'm just pissed about that. Is that silver is not $500 an ounce. Okay. Your breakdown was mind-boggling. It's the truth of it. I mean, this is going to get uploaded. Just go back and watch it again and go and research it for yourself. There's not a single thing that I missed or got inaccurate on any of that stuff. Like, it is all 100% true history, right? Not the way they're telling it, right? I mean, this is the way I'm documenting it because I'm documenting it in real time, right? My whole channel is all about this. I mean, you think about it. Go back and watch the video. I brought this up the other day. Things are changing, right? That's a video I did, I don't know how many years ago, back in 2018, maybe. And in that video, I was talking about the repo facility. You know, and I didn't know that it was going to become a standing repo facility. I didn't know that was going to become a common tool for the Federal Reserve. But I brought it up in my videos to the people's attention, saying, hey, we got to watch this thing. This thing is like the Fed is talking about this. Before September of 2019, before anything happened, they knew it was coming. Like, these guys are not dumb, but they can't tell you. And if they did tell you, it would screw everything up when it comes to their monetary policy, because their monetary policy is conducting a mindset. Like, that's what it is. It literally is trying to keep the inflation expectation elevated. If they do not have that, they fail to conduct themselves with their monetary policy. They have to have it. It's so weird to think, because like so many people are stuck on the idea of money printer go burr, right? And I'm thinking, man, everybody who has that within them and will not see it any other way is actually the benefit to the Fed. They are the ones who are now allowing the Federal Reserve to continue on in the way that they are. And that is sad to say, because in their minds, they don't like the Federal Reserve, right? But they don't understand it. They don't understand what's happening. And so by taking on this idea that they are causing a hyperinflation scenario and that they're going to totally destroy your life and that they're going to destroy the economy and everything else, that is actually working towards the Fed's benefit. Sad, right? And, you know, understanding monetary policy for what it is how you see it. Like, you're not going to see it any other way. No other economist is going to come out here and talk about this, right? I mean, I haven't seen a single one. Not one. Like, I don't even know how it is that I got here, right? Obsessing over this stuff is the only way I've been able to do it. Now, you know, I don't know what it is that needs to be done out there, but all I guess I can say is at least you have the information, right? I mean, you know, the other, you know, millions of people out there who don't understand it or are going to believe, you know, whatever it is that they're going to believe about it. And I'm not saying that they're inaccurate, right? I'm not saying that their stuff isn't factual. I'm not saying they're not being truthful, right? But hardly anybody's talking about it from this angle, right? Moving on. All right, crazy that we get taxed more than a house payment these days. Yeah, you can. All right. Thomas, they want high inflation because that allows them to raise rates, which in turn eventually allows them to cut rates. That will only half the reason, but it's a simple way to understand it. Yeah, no, that's actually true, and that it's about half the reason. As long as they have an elevated inflation expectation, that will also force the neutral interest rates to begin to rise. Now, you got to remember, if the Federal Reserve stands still, see, this is one of the reasons why Bowman, why is it that Powell says, oh, we're done raising rates, but Bowman says, I don't think so. We might be raising rates. Powell, you got to understand, is the spokesperson for the FOMC. He does not make the decisions, right? He is one of 12 people and 5 alternates, right? Or something like that. So there's voting members of the FOMC. Michelle Bowman is one of them. Powell is one of them, right? John Williams is one of them. There's a bunch of them out there. Now, they are influential within their own speeches, like within their own talks. They know a lot. They communicate their understanding of the economy and where they see it with all the rest of them out there. However, Michelle Bowman says, I am not opposed to the idea or have the idea off the table of raising rates. And I believe that is the truthful statement coming from Michelle Bowman. If you think about the inflation expectation continuing to be elevated, raising the neutral interest rate, bringing it ever closer to the Fed funds rate, which is going to be standing still going into the future, making the restriction on the economy less, meaning that there could be more inflation coming from just that scenario of a higher inflation expectation and the lower or the narrowing gap between the neutral interest rate and the restrictive Fed funds level. All right. You see, like if she sees that coming into the future, then it would make sense that, hey, we want to keep pace. We don't want to see more inflation or less inflation. We actually like the inflation modestly above 2% for some time. And so we're going to have to raise the neutral interest rate to make sure that we don't, or keep pace with the neutral interest, raise the Fed funds rate to keep pace with the neutral interest rate. There we go. You guys get what I'm saying? Like, who else talks like this, man? I mean, just the crazy dude sitting in his Explorer drinking too much coffee. That's who. Good call, Mary X-Men. Guard your sanity. What did Mary X-Men say? Where's that? Mary X-Men. I mean, how much energy should I spend trying to understand an insane system? Eventually, it will drive us crazy, right? I don't know. I'm getting kind of crazy in a lot of sense, but, I think understanding it to the level that I do, this actually gives me a lot of comfort in the idea that when I see the stuff out there with the mainstream media and the economists who are saying that everything's all screwed up and they don't know what they're doing and all that other stuff, I kind of laugh at that saying, wow, I hate to be in your shoes, man, because you don't get it, man. Like, I get it. Like, I feel confident. I feel confident that I would just go toe to toe with any economist out there. Like, pretty much any. Like, I would stand in front of Congress going, y'all got it wrong. Like, I got it. Like, I think the Federal Reserve would love to shut me up, at this point, because like I've got it so dialed in now. And I don't mean to say like I'm some sort of expert on their, like, how they conduct themselves when it comes to their, intricate systems of tech, whatever crap they got going on with the computers and stuff. Like, I don't understand any of that crap, right? But when it comes to the strategies and the theories and what it is that they are doing, I got it. Like, I got it, man. I got the speeches lined up. I got the highlighted marks. I got the ideas down. I take it all the way back 20 years. Like, I mean, it is, it's like once you see it, you can't unsee it. Like, once you get it, and it's like almost having like I don't know. I don't even know how to describe it. It's just like, I just have it in such a way that, like, most people probably will never ever be able to grasp it because they have learned the economy in a system that has now set them into a box that they can't get out of. Like, most people, they learn like from a base and then everything off of that base, and that base doesn't change. And the base that I learned from doesn't like really exist. Like, I don't have a base. I just started learning, right? And so I don't have any rules or expectations or anything else of what I learned about from somebody else or about the economy or what it is comes from it. Like, I just look at it. All right. Simon, Benny, oh good Lord, Benny, we're nervous here. Okay, what do we got? Simon, I wouldn't say that you know what the Fed and bankers do to people who they don't want speaking. You know better than even suggest something like that. Yeah. Well, I I like the fact that I'm really just a nobody sitting down at a lumber yard spitting it out in my car, right? Like, there's no reason. Like, I think the less attention that they bring to me is probably to their benefit. And if all of a sudden I was getting shut up for whatever reason, I think that that would bring more attention to the channel, to the topic, and that would just work to my benefit of spreading this information. So I think it's better for, them to just, not do anything, and just, assume that, nobody's going to listen to some dude sitting in his car drinking too much coffee, talking to the internet at 9 o'clock in the morning. Good morning, everybody. I love you guys. All right. Ron Paul couldn't get a straight answer out of Bernanke 15 years ago. Well, no. And you're not going to be able to get a straight answer out of these guys because they're not going to give you a straight answer if you go and you talk to them and anything that's going to be straight, stated over the media. Remember, there is two communications happening. Like, they tried. There's a video that I did not too long ago. I don't remember what I titled it, but it was, I don't know, a couple of weeks ago. And Powell was testifying in front of Congress, and the congressman asked him straight up, like, point blank questions about, like, you are going for an inflation that is over 2%. And how long are you going to do that? And, like, they questioned him right there. Like, you are doing this. Powell admitted it, right? He admitted to that. And then said, yeah, we are going to review that policy at the end of the year. That is still something that they plan on doing. At the end of the year, they're going to do a review of the policy, and then the results of that policy will be published a year from that. Pretty interesting, isn't it? Like, none of the real monetary policy, like, if you don't understand this right now, when it comes time to understanding what the monetary policy is doing and all the other ideas coming from the Federal Reserve in a statement that is actually going to be publicized and stuff, it's going to be far too late. Like, if you don't understand this stuff in real time, then what's the point? You're going to go back and go like, oh, you guys did what? And you're going to be like, it's too late. Like, all your investments, everything that you did, all the decisions you made, it's all too late. Like, if you don't understand this stuff in real time, then what's the point? You know what got me to this is because I was following lumber and I saw all the crap that was being stated about lumber through the media, right? And now, again, I'm not trying to call myself some sort of lumber expert, but damn, I was a lumber expert, right? I saw the lumber market better than just about anybody, and the things that I was seeing being said throughout the media was absolute crap. Even over YouTube, people were pulling up some good information about corporations and how greedy they were and all kinds of stuff. And I said, you're not talking about anything about how they were bleeding money for the previous years, right? And how many shut down because the lumber prices had completely collapsed. And so they were talking about how they're greedy lumber yards. And I'm thinking, yeah, do you realize how these greedy lumber yards are just coming off of a world of pain? Nobody wants to talk about that. I mean, that was just one little aspect of the whole thing. People just didn't understand. They just people can only understand the information that are given to them, right? And if you're not out there seeking that information firsthand, then you're going to only deal with what it is that's been delivered. That's all there is to it, and so that's why it's important to to go out there and do your own research. And I mean, like, literally, like, I don't know how many times I've heard people who do videos like these say that, do your own research. But man, that is so important to do your own research. That's why I leave links down in the description so you can at least see where I went to. Was Paul Volcker a straight talker or Fed speak? I really should go back and read some more of what it is, but, like, you got to understand, back then, prior to about 2012, I think it was when the Fed changed their communication style, right? So after 2012 and the Federal Reserve changed the way they communicate, things became very different on their monetary policies and how it is that they communicate that there was a time they didn't even communicate monetary policy. Like, there was, like, one day you wake up, it was just that, there was no media attention to them. They never did any speaking. And then when they did, it was Greenspan who did not speak in a way like anybody would ever understand. Like, he purposefully made his speech incredibly complicated so that people would not understand what it is that he was trying to communicate to keep the people guessing, right? But after 2012, they knew that their communications were going to be a lot more important to the reaction function. Is that what it? So I think that's what they kind of. In fact, I think Bowman referred to the reaction function. But anyway, like when the Fed communicates something out there, right? When they put the idea of what it is that they plan on doing, or the forward guidance um, communication can then have serious, real impact on the economy as the people begin to behave in certain ways, right? In the ways that they communicated and they find that is going to be most appropriate for them. They know this. They know that these communications are very important to the markets, to conducting themselves. And so after 2012, things became very different to the markets, right? Or the communications became very different to the market as they became very clear, right? And they were communicating more distance, more time, more, detail to the monetary policy. However, if you understand what it was that they were attempting to do, right? They know that they are going to have to use that perception to their advantage. There is different ways of communicating what it is that they plan on doing. Do they plan on communicating that what it is they're doing with an open-ended or close-ended style to it? Just for example, with the Fed funds rate right now, it's an open-ended forward guidance that is happening. A closed-ended forward guidance would be like at the next meeting, we are adjusting interest rates, right? We are definitely going to do it. We don't know exactly by how much. That would be an open or a closed-ended forward guidance, right? Gives them the ability to adjust it some. Nobody knows exactly how much. They can only be, they can only guess to where the level is going to be. So it allows the markets to then consider what it is that they see happening within the economy itself to then position themselves to what they feel that is going to be most appropriate on what they feel that the Federal Reserve is going to do, right? And it literally gets the market to find its own balance. Like you can see this working in the reverse almost when they had when they started raising rates in the early days, right? Think about what happened to mortgage rates. Like they shot up almost instantly. Like within a month, they went from like rock bottom to sky high price, like sky high yields, right? Or interest rates. But yet the Federal Reserve had barely moved. Like, I mean, they were just getting started. They continued to raise rates for a long time, but the mortgage rates kind of stood still. Like they just didn't go anywhere else because the markets found its balance almost right away. When they knew that the Federal Reserve was out of the market, it was just like, okay, this is it. We're on our own. Where are we at? What yield is going to be most appropriate to us investors who want a steady income from the mortgage market? And when those mortgage-backed securities got to that yield, got to that price, they were like, yep, that's it. And at that point, the Federal Reserve can continue to raise rates without really having an impact on the mortgage market. It's just like, how did I mean, I called that one out a long time ago too. Yeah, I called that one out a long time ago as people were new. Once the Federal Reserve, they saw the Federal Reserve raise rates, saw those mortgage rates shot up like dramatically, and they thought, oh man, this is it. And I thought, I don't think, they thought, man, this is it. Like the mortgage market is going to crash, right? Because all these interest rates are just going to go sky high as the Federal Reserve continues to raise rates. And I said it then. I'm like, no, I think like they're going to top out. Like, I don't think they're going to go any higher than this because this is where the investors found their ground, you know? Found their lower ground, I guess, or whatever you want to say. All right. See, if you can get an interview with Trump and talk Fed stuff, I don't want unnaturally super low interest rates again, but still voting for T or RFK Jr. Great show. Well, thank you very much, John. I would be honored to have a conversation with Donald Trump, like to sit down. I got a picnic table right there. I'd love to sit down at that picnic table and have a conversation with Trump. I do not want to interview him. Yeah. Um, that's not something because I'm not into politics. I'm not into talking anything about it with him because I really honestly feel that he had his chance and he's whatever, right? He had his chance. And you know, for all the things that I really, really liked about candidate Trump, when he was talking about, you know, all the crap about the Fed and all the other stuff as he was trying to get into office, I really approved of a lot of that stuff. I said, man, if you don't stand up to this, if you do not stick to this, I'll never trust you again, man. Right? And so he didn't. He didn't stick to it. Federal Reserve still acts, you know, he was wanting the Federal Reserve to actually take interest rates into negative territory and print money and all the other stuff. And I'm like, bro, this is not what I was expecting. This is not what I was expecting when I was listening to candidate Trump talk about the Federal Reserve. Right? And so when I heard the interview with Alex Jones, and Trump said that he was going to be the most surveilling president and he was going to be the most warring president, I thought, man, I'm not really approving of that, right? And I just not down. Like, I'm not down. Now, as far as like just talking with the dude, I would really enjoy a conversation. Just hanging out and just saying, man, wow, what a dude, right? I mean, it was just like, I would love to have that experience of just having some communication conversation with them. I've had some communication conversations with a lot of people. You gotta understand, like, I mean, you know, one of the coolest people that I didn't think was as cool as he was Robert Kiyosaki, right? He has a very, like, kind of aggressive attitude that goes out there and it's just like, it's kind of hard to take. You sit down at the table with them and have like a meaningful conversation about like history, like his history, like his growing up and stuff like that. Dude is cool as hell. Cool as hell. Like, you wouldn't believe it. He had one of the coolest conversations with my mom at a cocktail party for after George Gammon's Rebel Capitalist Live event. It was like, yeah, because my mom lives in Hawaii or lived there for a long time. And they sat there and talked island stuff for like an hour or more, you know. And he's way cooler than what you would think from a lot of the aggressive stuff that he has ever said out there. So I would love to meet Trump on that fashion, on that level, right? Because I think that would be like one of the coolest things I would ever experience, you know. It's like, you know, kind of like on the almost like, I mean, nothing negative to say about anybody that I've ever interviewed or met or anything else out there, because everybody from the experience that I've gotten here on YouTube has been absolutely just incredible. I mean, just mind-blowing stuff, you know. Right down to, like, you know, even interviewing Peter Schiff, like, for the channel. That was so cool, right? I mean, he gave me one of the coolest interviews, considering that he didn't seem really that interested when he realized I was in my car and I had this sagging headliner. It's funny, right in the middle of the interview, my boy photobombs it, right? He jumps up to the window because I was parked in a parking lot, and he was just like, you know, it was funny. Peter was like, what, do we need to end the interview? What, you need to move your car or something? And I'm like, no, man, let's keep going. You know, it was good times, you know. But thank you so much, Nolan. Oh my gosh, for the $49.99. Thank you so much for that big old super chat. Very cool. Stocking up on cash for the liquidity crisis, figuring I would send a little Mr. UE's way. Thank you so much, man, for informing me that the crisis was happening in the first place. I've learned so much through your channel, man. Keep up the good videos. Yeah, you bet, man. And thank you so much for the super chat. I really appreciate that, man. All that support is so incredible, man. Very, very generous of you. You know, and I mean, I thank you guys. I thank you guys for being here, being part of this, being part of the experience, because I don't know if I would be as driven to do this if you guys weren't here. You know, I mean, earning the money has changed my life. It's changed everything about what I am doing and where I'm going, man. It's just like, I can't thank you guys enough for that part of it. But really, the understanding of this, I think, is so more important to the outcome of our lives in the long run. Like, nobody really gets it like this, right? Like, just a handful. Like, right now, there's 253 people right now who probably understand this in a way that is unlike anybody else they know, right? And even if they were to try to explain it to somebody else, it was so deep. There's so much information. You got to break it all down. And if you're misguided to begin with, now it's even harder, right? It's almost easier to understand this stuff if you have no clue than it is to already have a clue and try to unlearn what it is that you have learned or what you believe is taking place so that you could figure it out for what it really is, you know. Man, I really appreciate that too. Thank you. Yeah, I mean, you can see it happening, right? Now, this is what's funny about it is that if the uneducated economist can call out the liquidity crisis, you know it's not going to be a crisis, right? Like, I mean, they can't be. The Federal Reserve is going to do something to prevent it from outcoming to a crisis level, because otherwise, I wouldn't be able to say something about it, right? Like, if I can say it, they know it too. That's all there is really going to come down to it. So I don't know about the security measures, the security, like the whatever it is, the programs, the unusual and exigent circumstances, the tools, or whatever it is that they have going on. Treasury's lining up for it. You can see they're prepared for it as well, right? So they're like, these people are not going to be taken off guard. A lot of other people will be, and they will believe that the Treasury and the Fed and all these other people are caught off guard because they don't understand or know about any of this stuff that we've talked about. But, understanding it to that level, I mean, you can still position yourself. I still believe that a cash position is going to do quite well going into the future, where everything is not everything, but a lot of things are going to be coming on sale, where buying opportunities are going to present themselves. And I find that's probably going to end up being more in people who have moved into a rational exuberance and them unloading those decisions. Right? Buying the RV, the motorcycle, hopefully a newer Camaro that hasn't been driven that much. Uh, Simon, do you know that the best work boots are made in the Pacific Northwest? I like that. The tool is digital. Oh, we're getting close to a reversal. All right, I know. Excuse me. I know Simon really appreciates his viewers. I have just over 200 subs, and I appreciate them to pieces. Compound appreciation. Yeah, man. And it's cool when you like. I remember when I first got to 100 subscribers, I thought, holy crap, man, there's actually 100 people who would actually hit the subscribe button on my videos. That's incredible. And then I had a video get like 1,000 views. And I thought, whoa, that's a lot. Like, that's too many. That's too many people. I'm going to delete my channel. I can't handle this. Right? Here I am, 135,000 subscribers, and it's just like, oh my gosh, man, I can't believe it's grown to this incredible level. And I didn't, like, it's so funny because people are like, how did you do it? And I'm like, I don't know, man. Like, I didn't even really try, I didn't try to do this. I wasn't trying to. I was just trying to make videos. I was just trying to understand the economy, right? When it got monetized, I thought, okay, well, make $100 so they'll send you some money, because that was the Google's threshold. You had to earn $100 before they would send you a check, or before they would deposit the money in your account. So that was my whole goal, was to earn $100. Like, that was literally for monetizing the channel. That was it. And I never really put any other goal after that. Like, that was it. My whole goal for monetizing the channel was $100. I did that right once, and then I thought, well, let's do that again. And that was it. Like, I didn't really think anything else about trying to earn money or sponsors or anything. I did do the sponsors. I did try to earn money. I do some other stuff. And it doesn't feel like what it is that I want to do for the channel. Like, the channel is this. This is the information. You are the sponsors of the channel. The $49.99, the all the super chats, the total, what do we have up there? There's $71.97 in super chats right now. You guys are the sponsors of the channel. See, I don't need to go and throw around some gold company that I've never heard of to try and get you to buy their stock so that I can earn a bunch of money. I can do this just like this, and be totally content. All right, I wanted to say I appreciate the repetition of your points. The stuff is not very easy to get very easy to get to grips with, for me at least. No, and that's the thing. It's going to be hard to get to grips with it for just about anybody. It's hard enough just to say, man, I want to learn about the economy. right? And then to understand that to each individual person, the economy is something different. Like for me, this is the economy, where it is that I can position myself in accordance to what it is that I think that the Federal Reserve is going to do, especially when it comes to my investments and possibly like any business ventures that I go into if I was to do something of that nature. I think that the monetary policy and how it is that they conducted themselves firsthand from their speeches, what it is that they are saying in this fashion is probably the best thing that I can do. However, if you're in a position in which that politics are very much involved with your business, and I don't know what that might be, but whatever it happens to be, right, then it's probably really important that you follow politics, right? Because that's really critical to your outcome. And so for that person, whatever is happening within the economy, within their economy, the decisions that they're making, the business that they have, politics are really involved with it because they've made that decision, right? They've made decisions that have now forced politics to now have an outcome to their life. Right? I didn't do that. Like, I don't do it that way. Like, I mean, politics are going to have an impact on my life, just like every single person out there. There's no way that you can get around it unless you happen to be some hermit that lives out in the middle of nowhere, right? So you're going to have some sort of impact on your life, but how much you are allowing that to have an importance on your life is up to you. Right? You don't have to allow it to have that kind of importance on your life. I mean, but people do. And generally, it's because they watch too much TV, taking in politics from the propagandized media, very much like monetary policies coming from propagandized media, and that leaves them very confused and frustrated and not making good decisions for themselves. All right. Who issues the notes? The government, the same government that gives banks license to exist. Glad to see you admitted the stock pushing was a mistake. I'm very honest with you. I didn't say it was a mistake. I said I didn't like it. Okay? I said I'm not going to do it because I didn't like it. I didn't say it was a mistake. It wasn't a mistake. I mean, the money was very useful for my family, and I would love to do it again. Right? I would love to have that kind of money for my family. Right? It was a lot. It was worth it. Right? And so it's not a mistake. I just didn't like the way it made me feel. So, I mean, if you want to say that that was a mistake, I didn't like the way it made me feel because I didn't think it was honest to the channel. Now, if I had some other channel in which that I was talking about, I don't know, whatever, then I would push something like that, I guess. I mean, I don't know. But to me, since the beginning of this channel, it's all been about how it is that I have been learning this stuff, what it is that I truly feel about what's happening within the economy, and pushing a stock that I've never heard of before isn't being honest, right? So again, like, I mean, I admitted that from day one, from the time that I did it. But anyway, thank you, Benny, for bringing it up. I'm getting to really like Benny. All right. Hey, Matt, what's happening? You could do a weed dispensary sponsorship. Actually, I thought about that. One of the guys down here who came in to play bingo, the pharmacy in Astoria, he asked to do an interview. And I thought, yeah, we could probably do something like that. Of course, well, I'm going to load up on a bunch of weed. All right. Benny quit that. Now, Benny's cool. All right. Yes, yes. Cash position requires discipline, patience, good advice. Keep an eye on debt nationally and individually. Thanks. P.S. I'm a big fan. Kiyosaki. Old now, me that is. Real estate may go on sale. I like Benny too. Everybody likes Benny. What a guy. Sacrifices for his family, takes notes, lads. How does the Fed know we hit the neutral interest rate? You don't. And see, that's a good question to ask, because really you have to think about that. Where is the neutral interest rate? See, now nobody even knows where the neutral interest rate is. If you want to go and study something that is kind of difficult to really understand, but is probably the best or most accurate way that you're going to find where the Federal Reserve sees the neutral interest rate, and that is by studying something they call R star. Now, I'm done trying to figure out R star. Like I'll probably try again at some point in the future, but right now I just can't. Like I've tried looking at R star. They come up with some mathematical equations and ideas and concepts and stuff to try and figure out where it is that this R star level is. But I guess the easiest way to understand it is where it is that they feel that inflation expectation is going to be in the future, considering the inflation that is happening today, on where they feel that the neutral interest rate that would not be restricting the economy is, right? So like it has a lot to do with where inflation is right now comparatively to where the inflation expectation is going into the future, right? And how they come up with this like thing is just like I don't even know how to describe it right, you know? So I don't know if they know if it's even accurate. And like I don't even know if anybody knows a way of figuring out what the neutral interest rate is until it's already passed. Like they can probably look back in the history and say, oh, okay, well, it was here, you know. But as far as current real time, I don't think there's a way of doing that. And a lot of that has to do with the fact that they don't know what decisions that we are going to be making right now. Like that has a lot to do with it. Like where it is that is neutral really comes down to what it is that we are going to be behaving like in accordance to where the interest rates are. So there's no set information on that. You know, it's like it's not made up, right? But it's not clearly defined and it's not easily seen, right? So they just know that there's somewhere above it, and that it moves, right? In relation to where inflation expectation is. Benny is good people and welcome addition to the show. He really is. All right. What's your thoughts on central banks buying 20 tons of gold bullion? Well, I think a lot of that has to, I mean, although you can take on like the idea that it's like them trying to get out of the dollar or dollar denominated assets or something of that nature. And that does, it makes a lot of sense and has a lot of logic behind that. But ultimately, there's a lot of things happening within the major central banks around the world that's going into what they refer to as this Basel III endgame. And I have a feeling that a lot of this gold buying is trying to isolate themselves away from the third parties that are out there, excuse me. And just like anything out there, no matter who you are, whether you're an individual person, a sovereign nation, a central bank, government, corporation, doesn't matter. You can isolate yourself from the third party by being in gold. And that's probably one of the major reasons why you're seeing such gold purchases taking place, is that people are so uncertain about what it is that is happening, that is one place that you can go to that isolates yourself away from the dollar, from the third party claim. And this is one of the reasons why, like, I believe that gold and the dollar is going to rise together, because really there's no other place that you can go other than the dollar or gold, right? There's no other asset that is going to even come close to what it is that the dollar is doing, and everything is denominated in dollars. So if you're going to get out of dollars, you have to move into gold. Gold is the only thing that's by itself that is away from the dollar. And silver and bullets and food and other stuff, but essentially it's gold. All right, thank you so much, Gerald Vestal, for the $10, man. Very cool of you. Eddie Jones is wanting to move me into bonds or bond funds. What's the difference? And I'd rather move into cash more than anything. What say you? Okay, man. Well, think about it in this fashion. Right now, bonds yield more than this is not advice. I'm just trying to explain it from like, hey man, somebody's wanting me to get into bonds. What would I say to this? I'd be like, okay, so right now the bonds yield a pretty decent amount, right? And so if you're going in for this yield that you have, then you could probably do okay with the yield that it's going to be returning. If you feel that inflation is going to be rampant into the future, meaning that it's going to go up, well, then the yield has to be fairly significant in order to beat the inflationary scenario, right? Now, if you feel inflation is going to go down and you can lock into a yield that is fairly decent right now, and even go into a disinflationary scenario, well, then that would probably do pretty good, right? So depending on which way you feel that the economy is going to go, like I couldn't tell you, right? I mean, nobody knows what the future is going to hold, right? But take on your own feelings towards this. The other idea behind it is that if you happen to be in the bond portfolio, right? You have this bond portfolio and the yields go down, right? Well, yields go down, prices go up, right? So if the yields go down while you're sitting in that bond portfolio, the portfolio value will begin to increase. Pretty good deal. If it goes the other way, right? If interest rates go up, right? Michelle Bowman says she thinks she's threatening of it. If inflation continues on, then the interest rates are going to go up, right? Well, then you'll be in this bond portfolio, and the price of that bond is going to go down as the yields go up and your portfolio value shrinks. So which one do you want to be in, right? Now, cash position, nothing, right? If there is inflation going into the future, you'll lose some purchasing power, right? Now, if there is a recessionary pressure that's coming and prices come down, then you have your buying opportunity, right? What do you feel is going to happen? I mean, again, nobody can tell the future, right? Like I personally am in all things. Like I don't know. Like I mean, I got cash, I got Bitcoin, I got gold, I got stocks, I got, I don't have a lot of anything, but I have all these things, right? Just because I don't know which one I'm not putting all my eggs in one basket. If you want to become super rich, if you want to become wealthy, you have to put everything in one thing. You have to move all into one thing, right? But that's risky. It's risky as hell. And I don't know if I'd necessarily want to become that rich that way, right? I'd rather become rich in another way. And right now, I'd rather go for the security of it by having a diversified, portfolio out there of many different things, right? That way, if like, stocks crash, it'd be like, ooh, man, that sucks. Not a lot of money, but it wasn't everything I have, I didn't have it all tied up in that. If the bond market crashes, it didn't have that much in there either. In fact, I barely have anything in bonds at all. And I would go with that, kind of mindset to it. But, it's harder if you didn't build it up that way. Like for me, I didn't have any problems putting a little bit in all these things because I had nothing, right? But if you have been like for 35 years in the stock market, and that's everything, like, I mean, you got a few $1,000s worth of silver or something like that, but you got $1 million in the stock market, like, where do you go? Like, I mean, do you stay in the stock market? All of a sudden you just start diversifying into all these other things. If you build that up from a younger age, or at least from nothing, right? And you just kind of just build up this portfolio and all these different things, you don't really think about like, where the stock market goes or whatever. It's just like, up, down, sideways, whatever. You don't really consider any of it. Like same thing with Bitcoin or gold or whatever, and that's why I got into silver to begin with, is because I wanted something that I could have away from that third party, that I could sleep at night, and all right, man, you guys are so generous, man. I'm loving it. Make this a lot of fun. Okay, how long? Let's see. We got 10:15 right now. Okay, hour and 13 into it. We'll give it like another 13, 15 minutes or so. R star is a good attempt to find the quote natural targeting for the high quality debt, but the blue chip corporation bonds be a better for good base indicator target. Huh, interesting. All right, don't have much anything, but a little of everything is better than nothing. That's right. What's a bond? All right, Ray, are you okay? Well, since you asked, and I'm going to take the question seriously, a bond is a loan, right? Just like any loan to anybody else, it's a loan, right? Now, there's all kinds of bonds. There's government bonds, there's corporate bonds, municipal bonds, there's all kinds of bonds, right? But a bond is a loan, and it's a promise to pay. So now, if you can imagine, the old school bonds were paper bonds. Now they're digital, so they're just computer entries. But back in the day, they used to have actual paper bonds. So like if you can imagine this here John Williams speech that I have, if this was one of the paper bonds, it would have a face value to it. It would say like $100, right? $100 face value bond. And it would have a time maturity to it, meaning that over the course of 10 years, right, from the purchase of this bond, it will mature. meaning that you can go and cash it in and get your $100. Right? It'll meet the face value. In the meantime, it will pay an interest rate, right? Because this is the loan. So it's a $100 loan, essentially, with an interest rate that it's going to pay. Now, the interest rate is paid by what they refer to as coupons, right? Now, the coupon rate is set, right? 10% coupon, 4% coupon, whatever, right? There's a coupon rate that's attached to it. And they call it a coupon because it would be attached to the bottom of this paper bond, and you could literally rip off one of these little coupons and go and cash it in for the interest payment, right? That's why they called it a coupon payment, right? After all the coupons have been paid over the 10 years, right? So like this happened to be a 10-year bond, right? Pays all the coupons, then you could go and cash it in for the face value and get your money back. So the coupons were the interest payments and the face value was the loan, right, of the money. So that's a bond. That's essentially the easiest way to understand a bond. Now, the reason why the yields change and the price change, the bond doesn't, right? The $100 face value, the coupon rates, set. It's marked out, it's written down, it doesn't change. However, the price that we pay for it can. Right? So if you purchase this bond, let's say for $100, 10% coupons, that means what you are going to do is get a 10% yield, right? You paid $100 for it, you got 10% coupons down at the bottom. At the end of the life of the maturity, you will have been paid $10 for each coupon, 10% yield. Now, if you are an investor who came up and said, hey man, you just purchased that bond, but there's none left, and I will pay you $110 for that bond that you just paid $100 for, and you pay $110 for it, now by the time you get paid back, you will have been paid back less money, right, than what the original investor had from his original investment, because he paid $100 for it, you paid $110. Even though you're both going to get the same amount of money back after your original investment of $110, your yield on that bond has fallen, but the price had gone up, right? Because you paid $110. This is why the yields fall and the prices rise. Very important to understand that. Like, that is probably one thing that nobody gets. Like, you know, it's like understanding that what I just talked about there. I don't know how many times that I've asked somebody about the economy and they couldn't explain that about a bond. And yet they're trying to explain things about like Bidenomics and stuff like that. And I'm like, if you can't explain how a bond works in that fashion, then there's no way that you can understand what's going on in the economy. You just can't. There's no way. Right? And it's not so much that you can't understand what's going on in the economy. You can't understand what's going on in the financial system in relation to the economy, because the financial system is 100% based on that right there. Like everything. You think all your credit card debts, all your car loan debts, all the house loans, all the debts that are out there, they get jumbled into a box and considered a collateralized debt, right? Whether it's a mortgage-backed security or some crappy ass business collateralized loan obligations, all the loans out there get bundled up and sold off as a bond. Very similar to what that is right there. Very different in a sense that they have tranches and ways that they pay, and very clever in how they work, but ultimately that's it. All right, it's a promise to pay, and it's the entire financial system and pretty much what everybody is anticipating when it comes to functioning within the economy. All right. Let's see, how much for that paper you're holding right there? For this? For the half a speech? I don't even think it's the whole speech. It's not. It's only half a speech. You can go get it yourself. It's the, I'll do $100, man. Send me an email, and for $100, I'll fold this up, put it in an envelope, and send it to you. Dude, it's just this a speech, man. Low neutral interest rate world. Monetary policy for a low neutral interest rate world. All right. Excellent explanation of a bond. Thank you. Yeah, you bet, Ray. Understanding the bond market is another big task. That's a diverse and confusing market, on the run, off the run. Yeah. On the run, off the run. On the run are bonds that are brand new, being sold for the first time. Off the run bonds are bonds that are already out there in circulation that have been purchased. The Federal Reserve can only buy off the run bonds. They cannot buy on the run bonds. So when the Federal Reserve is loading up on mortgage-backed securities or Federal Reserve, or I'm sorry, on U.S. Treasuries or any of that other stuff, that is off the run, meaning that they have already been purchased. On the run bonds are brand new. I understand the bankers' Intercontinental Bank of Settlements control bonds a little. Probably, imagine. BTC and the rest of crypto remind me of Tulip Mania. In a lot of ways, I mean, it is, but I don't really see it in the same fashion. So you have to understand, like, what was happening in Tulip Mania was the increase of money that was coming into that particular area was finding its way into the most unusual places, and it just happened to be these particular flowers, very much like a Beanie Baby or something like that nature. But they don't really serve any kind of real purpose. Now, Beanie Baby might look cute to some people and a flower might be beautiful to others. However, it doesn't really do anything. And that's where a lot of people think, okay, that Bitcoin is very similar to a Beanie Baby or a tulip. However, I don't really look at it the same way because I look at Bitcoin as a very useful tool for doing transactions. Now, you think about it, you can transact with somebody on the other side of the world using Bitcoin. You can't throw a tulip bulb to the other side of the world, right? I mean, so it's just when you look at it in that fashion, right? Then Bitcoin now all of a sudden becomes a very useful tool, especially when you can operate it outside of government control. In fact, outside of any kind of authority, right? There is no authority over Bitcoin. So now it's even better, right? Anything that you can, do without government control over is to me is like just a fabulous thing, because I'm mainly an anarchist anyway. So, when you have such an item, I don't look at it like a tulip or like a Beanie Baby or anything else like that. I look at it as something that is pretty cool and pretty useful. Now, outside of that, okay, right, and it doesn't really have much purpose, right? So I don't really put it up there on like the level of gold because to me, gold is something that is useful. I mean, it actually has use to it, right? Where you can use it in this like electronic equipment or something of that nature. It has an industrial purpose to it. But it doesn't really get used for that as much as it gets used for storage, for a store of value, like people are using Bitcoin. So on that level, it doesn't really have much purpose, right? I mean, it's actually serves less of a purpose because it's harder to transport. So, or even store, or, the risk that's involved with it. So it makes it even lesser, in my opinion, when it comes to Bitcoin, if you're going to store it for value purposes. But now, what it comes down to, which one's better, right? Which one's better, Bitcoin or gold? It's just like you're tossing this one back and forth. Well, to me, if you were to take Bitcoin and just remove it out of the world, right? Just like, hey, it never existed or whatever, gold wouldn't change much. Like, gold would pretty much be serving the same purpose it does today without very little consequences to Bitcoin being on this planet or not. Now, do the same thing to Bitcoin and take gold away, and all of a sudden Bitcoin is going to have a hard time operating. In fact, the entire planet's going to have a hard time operating because gold serves a purpose. Right? I mean, it serves a purpose inside of this computer and the communications and the technologies that we use today in all kinds of ways. Not saying that we couldn't find an alternative. I'm just saying that it doesn't right now. And if you were to remove gold, you would remove Bitcoin as well. Gold wins. That's all there's to it. Right? And so, but I see the benefits and, from both. Did I get another one down there? I did. Thank you so much. The Angry Capitalist. I love it. $5. Bonds are like trucks dumping water in a reservoir, then going into a bottle. Reservoir, then going into a bottle, then rating. The rating is guess about how clean or contaminated it is. Yeah, bonds are like a dump truck water in the reservoir, then going in a bottle. And the rating, I guess, about how clean or contaminated it is. Um, I think the idea behind that is that when money's going into the bond market, like when money's flowing in, everything's cool. When the money's like when the bond price is moving up, people are like into it. Like they're definitely a buyer. But when bonds start moving the other way, like nobody wants to touch it. It's like, how do they refer to it as? It's a highway going in and a goat trail going out. Right. And then it really does come down to like, why is this happening? Well, people are generally chasing yield. As the prices are going up, the yield is falling, and people are like, crap, where do I get yield from? If I buy this bond, it's expensive, and I don't get paid as much for it if I buy this riskier one. You move into the riskier one, and then all of a sudden, you're thinking, well, things aren't so risky. The bond prices keep going up and the yields keep going down. I'll get into a little bit of risk here. All of a sudden, things flip, and now interest rates are going up and the bond prices are going down. Nobody wants to touch your risky bond, right? And now there's no liquidity in the market. Right. This is one of the problems that they face out there. Liquidity issues, liquidity crisis. All right, guys, what is it? I'm going to give it just a few more minutes here, like 3 more minutes. We'll go to 1:30 exactly, and then I'm going to call it quits, or an hour and 30 minutes, because the family wants to go to town and hang out. All right, are central banks becoming political animals? I mean, I think a lot of central banks are out there, but I think the Federal Reserve itself is not. I think the Federal Reserve has a lot of independence to them, independence thinking that is away from the administration, and there is actual proof of this. If you just think about the fact that that Donald Trump wants to push for more authoritative power over the Federal Reserve. If he is trying to push for it, it means that they don't have the power to begin with, which means that they are not political, they are independent. So just in that right there, that Donald Trump wants to push for that authority over the Fed means that they don't have the political authority over them. They're actually called junk bond for a reason. They are. Simon, do you think technical investors waste their time? I think these days it's best to just invest going off of your gut and sentiment, the current market, and where it's all headed. Benny, man, I wish I could answer that question in a fashion that I would felt like actual smart about, but I don't really know that much about investing. In my opinion, this is not the type of environment that you would want to be like an investor anticipating that there was going to be a decent return from it, unless you happen to pick the right business, which would then mean going into your gut, right? But like buying into like the S&P or something of that nature, just generic buying of of an an index or something of that nature. you know, I don't think now is the time. Like, I don't think that, like, we're in a quantitative tightening cycle, which means that it's going to be very painful on most people out there, which I can't imagine meaning a lot of growth and good expectations coming from that. However, not with that being said, I think there's probably places within the stock market that you could do quite well in. Like I personally had done quite well in Coinbase, right? Like way better than I had ever anticipated. It was like, dang, man, I wish I had done more into that stuff just because, it was just one of those things I thought this is probably going to be prevalent within the future is this Coinbase, company, even though a lot of people don't look good upon it. I don't care. It's just like good, bad, or ugly, man. As long as it goes up in price, it's just like. Anyway, moving on. Did we forget Trump moved the Fed into the Treasury? Did that never happened? I don't know what he's talking about. I don't know what you're talking about. That doesn't exist. Are you talking about the unusual and exigent circumstances where they got together and used the Federal Reserve Charter 13.3, where they were able to incorporate the special purpose vehicles with the use of the Treasury to just backstop every corner of the financial markets? That was a temporary setup. I don't even think that was during Trump, was it? Like, I don't remember Trump doing that. I don't like I heard people talking about that, but I don't remember anything about that. And I don't know how that's supposed to operate. So, like, seriously, Joe, like I don't know what that I don't know about the Fed moving into the Treasury. I don't know what that is. I mean, when the quantitative easing, it seemed like they were probably monetizing the debt of the Treasury, but again, they don't buy on the run debt. They buy off the run debt. So, hey Simon, what is your perspective on this idea that the rents are rising dramatically above income? I know it's true of housing. Does it carry over into the rental market? Well, of course there is. Housing is housing. It doesn't matter whether you're renting or buying, right? A house is a house, and you got to have a place to live. And there's only so many houses and so many people, and the supply of people wanting to live in a house and the supply of houses that are available to them, the people far outpace them, right? So there's going to be a high demand for houses until they can build more houses, right? There's only so many supply of homes, right? I don't care what they do with the interest rates. It doesn't bring in more supply of homes to meet the overwhelming demand of homes. Right? And so now when you think about what it is that's really going on within our economy, you have to really look back into the Cantillon essay, right? I bring this thing up all the time. This is in super, super important information within this book. It's old, right? Hundreds of years old. Cantillon wrote this essay. There's 3 chapters. Part 2, chapters 6, 7, and 8, the increase and decrease of money to the state. Once you read through those, the questions on what's going on with real estate and rents and all that other stuff, it really gets answered. Like, you can really internalize what it is that has taken place, because ultimately this is the signs of new money coming into a system, separating the rich from the poor, and there's no better signs of it than the rents and leases on property, right? How much the property goes for. And so now we see these rents and properties at an extreme level, and they're not going to get any better. It's like it doesn't get any better so long as the system continues to go in the fashion that it is, where the new money pours in. If we don't have the new money pouring in, it's going to be pain and suffering and misery for everybody. So the separation between the classes, the inequality, has to continue on if we don't want the pain and misery and suffering to the likes of like everybody in mass form, or we have to suffer the consequences from allowing the system to continue on and deepening the wedge of inequality. It's just like, you can't beat it. Like, yeah, I mean, if if Cantillon can describe this from hundreds of years ago, then there's no reason to think that it can go any different. And really, this comes down to the dive into luxuries. That's really what it is a move into luxuries. If people did not enjoy themselves, then this would not be happening. Sad to say. Right? And I'm not saying enjoy yourself. Like, go to the beach and enjoy yourself. Go fish and go do things that doesn't cost any money. Right? Do not buy fancy Camaros. Right? As much as you want them, as much as you feel you deserve them. You can't buy fancy Camaros. You can't buy extravagant clothes. Can't go on fancy trips. Can't do any of that stuff. Because that is the reason why there is a separation between the rich and the poor, the manufacturing leaving the country, the ever increasing amounts of trade deficits, why they have to go into money printing. All the stuff that is happening is because people enjoy the money that they have earned. And it's sad, because people want to enjoy the money they earned. I want to enjoy the money I earn, right? Everybody does. There's nobody out there who doesn't. But it's that human nature that literally creates the problem that we experience, and we want to blame it on politics or central bankers or something else. It's not that. It literally is the move into luxuries that's doing it. The industriousness of the people and their willingness to work hard and save, produce and save, builds a strong economy. The result of that is the people enjoying themselves with that hard work and dedication that they had put in, that destroys themselves. It's sad. But it's just a cycle. It's a cycle in which it goes. It's not sad. It's just the way it is, right? It's not sad. It's just the way it is. All right. I'm rigging a lure in my car parked next to one of my favorite spots while I'm listening. Well, I need to fish. That's awesome, bro. I need to go fishing, man. I haven't been fishing in so long, and Freddie's been asking. So he's got a lot of baseball. Okay, in Denver, the mountains life is good. Real estate is slow everywhere. All right. But the type of people who have lots of money, they don't spend like talking about. They are smart. Well, of course they are. But that's just the thing. Just go and look at any time there is an increase in pay or whatever. Like, I don't know how many people say, man, it's so hard to make it out there. And I look and I'm like, man, you're driving a new car. Well, of course it's hard to make it, man. If I was driving a new car, it'd be hard to make it too, you know? Well, I mean, it wouldn't be that hard to make it, but I wouldn't be like, I mean, I wouldn't feel as comfortable as I do. I'd be stressing about, like, you know, man, I have to come up with this damn payment again and all the insurance and, you know, all the other stuff that goes into it. Like, I have to worry about, like, insurance on an old car, but not really. It's just an old car. Nobody cares, you know? Actually, $6 gas and double food price are more of a problem. They don't even go on vacation anymore. All right. Simon, I know you aren't big into politics, but at some point, geopolitics and those factions do affect economic policies. See commercial real estate take a hit. One faction won. Yeah, I understand that, but how is it like? How is like what had happened within? Okay, let me ask this part. Over the last since the pandemic, what has changed within the monetary policy? What's changed in the monetary policy strategy from a political viewpoint since the beginning of the pandemic? Because there's been a lot of politics that's happened, right, since the beginning of the pandemic. But when it comes to monetary policy and the way that they have conducted themselves, in accordance to these speeches, all the way dating back to John Williams' speech about monetary policy before the pandemic, all the way to 2018, November of 2018, what has changed about the monetary policy strategy? Like, I have been nailing it here this entire time, right? I mean, I can't say that I'm 100% accurate on it, but I'm pretty damn close, right? And I'm not involving politics in any of this strategy that I'm trying to figure out coming from the monetary policy. Now, there is a lot that's going on within the fiscal policies and the government and stuff like that that's allowed the Federal Reserve to conduct themselves in the way that they have, but it may not have been the government that allowed them to do this, right? It could have been a war. It could have been a natural disaster or something. What it is that the Federal Reserve is doing was something that was set prior to any political outcome, right? And that's what's important about it. The politics are interacting with this, right? And that's the way I see it. Now, yes, there is influence that happens out there, and the Federal Reserve certainly wouldn't have been able to buy a bunch of treasuries if the government didn't go into spending. Like, they could have. They could have bought treasuries. They could have bought it off of the open market and drove them into negative yields, right? But they could have done that. Like, I mean, it was a possibility that could have come from the Federal Reserve. They also could have bought in foreign debt. They could have done a lot of things. There was a lot of what ifs that they could have done. However, they did it this way, and they knew that they were going to be working together on it. Now, I understand that is politics that probably did that, but again, the Fed didn't need them. Right? They could have done this without the treasuries. They could have done it with foreign debt. They could have done it with a lot of stuff. Like, they have a list of things that they can buy. And especially when it comes to the expansion going into the sovereign nation of other countries, holy shit. Talk about the ability to expand their balance sheet indefinitely. I mean, man, they can just, that would be forever. And so I understand there's politics are involved, right? But I look at the monetary policy and the strategy first. And then I see how the politics are interacting, how the people are interacting, how everybody is interacting with that. Each and every single one of us is individual. We are the economy, right? And so when something is happening within the government, that's our economy, if we choose it to be. If something's happening within the financial system, with the banking system, that's our economy that we're interacting. If you don't have that involved with you, like, whatever happens in the bank, I don't plan on taking out loans, I don't have any debt, I don't have any, interest-bearing accounts, I don't have any, then financial consequence probably doesn't have a whole lot of impact on your life, especially if you have a steady 9-to-5 job, right? You're like, damn, prices are up, that sucks, right? Which is a problem. I get it, right? But most of the time, you're probably not going to have a major impact to your life outside of, like, man, I have to pay more for my food and I can't go out and hang out and do the things that I wanted to do, like, in life, which, boo-hoo, right? I mean, I've never been able to do anything I wanted to in life. It's all hard work. Yeah. Does the U.S. neglect accelerating debt levels in a hope that AI and quantum computing will exponentially boost productivity and efficiency. No, I think they're doing this in order to maintain the in order to maintain the system. But you have to think, like, how is it that the Federal Reserve? Oh shit, guys! All right, I gotta go. I got 5% on my battery. I should have left anyway. But I'm going to answer this real quick before I go. But think about it. All the dollar denominated debt that exists out there in the world, how is it that the Federal Reserve is going to provide those dollars to that world? All right. What is it that they can put on their balance sheet that then gives them the ability to expand that money supply? Now, they put mortgage-backed securities and gold and SDRs, but the majority of it is U.S. Treasuries. Where do the U.S. Treasuries come from? Come from the government. How does the government do that? They do it by spending, and they have to go deeper into debt in order to provide the Treasuries for the Federal Reserve to buy. That's why this is going to get very interesting going into the future on what it is that the Federal Reserve is going to do to expand their balance sheet ever increasingly more if they're not going to move into Treasuries, forcing the government to go deeper into debt. What are they going to do? They're probably going to start moving into the sovereign debt of foreign nations. But that is just a speculation. But I got that from Ben Bernanke's speech from back in 2002. All right. Love you guys. Thank you so much for all the super chats, the love, the thumbs up. We have 220 people or so watching right now. But my phone's fading away, and I'm heading off to town. All right. Uneducated Economist. You guys let me know.